Hello and welcome to the latest edition of the Allsop podcast. Today we are talking all things student, whether that's HMOs or PBSA. I am joined today by Anthony Hart and Will Ramshaw, who operate in the student investment market for Allsop, and also to Richard Ward, who heads up the research division at StuRents. Guys, we talked about it before. I want you to intro yourselves as well, talk about your background so the audience can understand what qualifies you to talk in such detail and expertise.
Good question. Today. I don't know what qualifies me to be here, Rich.
Yeah, you and me both.
No, so I head up student housing team at Allsop and have done so for the last 8 years. I formerly did resi investment and development and took the leap into student with a particular client at the time who was doing a lot in the space. We're really bad, to be honest, as a business, well, as a team, I suppose, as a student team, at plugging ourselves. So what qualifies us to talk about the student market today? Well, we're in the market at the moment with about 1,500 beds, so that's pretty good exposure currently.
How many buildings is that?
I think we've launched 7 buildings in the last over the last 7 days, so that's a taste of it.
Yeah, we're busy, and over the last 18 months or so, we've bought or sold 3,500 beds. So over the 18-month period, exposure to roughly 5,000 beds in the student across HMO and PBSA.
I think that definitely qualifies you as an expert, Will.
And I'm Will, who I also work in Allsop in the student housing team. Have done for about the last 4 years. Previously up in Leeds and now down in London, and I keep busy running around trying to sell these buildings that we're on with at the moment.
Yeah, well, he's even more qualified because he's actually doing all the work.
Yeah, you beat me to the punch there. Rich?
Yes, I'm Richard Ward, head of the research team at StuRents. I guess in terms of backgrounds, I've been doing this for 10 years now. Got slightly few more grey hairs than when I started, but it might be not if that's industry related or not. But in terms of us, the company, so we essentially operate the UK's largest listings platform, which is StuRents.com. We also have a separate brand that is a provider of property management software. That's via a brand called Concurrent. And the research team kind of leverages those two platforms to kind of provide lots and lots of data to a range of stakeholders. So we have a slightly different perspective. We're not an agent, so we sit kind of in between, I guess, different stakeholders within the market.
So where do we start? There's so much to talk about. So first things first, student, we've got a big audience here of experts in that sector and also some that probably don't know quite so much. So we want to pitch this so we all get to understand a bit more about what's going on in your world. But past 10 years, in a nutshell, where has it started? Where has it been? Where's it going? What's been going on in your market? Because from my seat, I see that it's changed so much. There's new investors in the market. The standard of student accommodation has completely changed. So where do you see things, guys?
Wow, that's a big question. I mean, there has, been a lot of change in student over the last sort of 10, 15 years. You can probably cut that 10 years up into many pieces, right? Yeah. Particularly perhaps over the last 2 years, more so than anything, we've had a tougher ride than we have for the previous 8, 9, 10 years.
I think if you look at even just student growth numbers, so you've had like a period of basically like 10 years of growth in student numbers. In the last couple of years, that's come off a little bit. So we have come out of a pretty long positive trend. How that will develop over the next few years, we'll maybe get back to that. But yeah, certainly student numbers have been on the up consistently for a very long time.
Obvious question. Why?
Yeah, that's a good question. I think growth in, general demand for higher education globally, so not just the UK, has definitely been a driver there. If you look at things like growth in Chinese numbers, they've been really, really strong. Interestingly, from a UK standpoint, and again, we'll maybe come back to this, a big proportion of that growth has come from a rise in participation rates, so a greater proportion of 18-year-olds, for example, going into university. I think it's off the back of Tony Blair and his policies back in the day. So all that's kind of helped contribute to that kind of rise in total number of students in the UK.
So that peak, was there a peak then? So say 2 years ago, or was it obviously with COVID in between that as well?
This is what I was going to raise, is that all the data is kind of skewed around coming out of the back of COVID, right?
Yeah.
We have to take that carefully into consideration when we're looking at growth numbers.
Yeah, I mean, you're absolutely right. So if you look at post-COVID, there was particularly a boom in international postgrads. So the problem that I think the market's had over the last couple of 2-3 years really is, yes, some of those numbers have come off, but it has been from a very high base. Yeah. And that high base was being impacted by post-COVID demand, basically. So again, if you were to put a straight line through the trends, they're still up. Its last couple of years been a lot more volatile.
So if you took the COVID, I wasn't planning to go through this, but this is interesting, but if you took the COVID stats and data out and you went from, say, 2018, 2019 to 22, 23, did they then realign again?
I think they're still up, marginally.
Still up.
Yeah. So actually, again, that long-term trend is there, but it's the last 2 or 3 years where you've had some markets, some universities, again, particularly international postgrads, have seen double-digit swings, positive then negative.
Why?
A lot of pent-up demand come out of COVID. So again, if you go back to 21, for example, and actually maybe later than that, 22 as well, UK opened up relatively early compared to some other kind of global destinations. So you had a big spike in demand from China and India, for example. So that's partly driving it. And if you're Chinese student, for example, or even a domestic, it was a very unsecure world at that time. So a route, and again, go back to the counter-cyclical nature of the market, which everyone references, at times like that, you go into higher education. So it's a good alternative to going into possibly a tougher jobs market.
So if we fast forward to, say, what's that 10-year period now, where are we sitting with occupancy rates? Because to the ill-informed, to the ill-informed like me, I read and see that there's less foreign students coming into higher education in this country. It's less attractive. Is that true?
Well, I think it's an interesting point you raised about occupancy. And I think the challenge has been developing the right stock in the right locations for a long period of time. So when you talk about Chinese students and you talk about Indian students and you talk about domestic students, they all, from my perspective anyway, want to live in different types of accommodation. And I think when you talk about occupancy, you have to reflect on what we've built, and you have to say, well, have we built everything that we needed to build for the right people and the right
There's probably
markets?
a lack of variety of products, right?
I think that's right. And ultimately, there are obviously nuances within each of these groups, but you would say that a Chinese student would want higher end accommodation, more luxurious, more amenity. You would say an Indian perhaps student would want sort of more affordable accommodation. You would say this isn't necessarily true for every single student, but you would, as a trend, say as much. And you would say a domestic student probably sits between the two of them somewhere. And so then you think, okay, about occupancy, and Rich, I'm sure will shed some light on that in a minute, but it's not necessarily that we've built too much. I think it's more a case of, have we built the right
stock? Yeah.
Why is that a concern now and hasn't been in the past?
Just touching on what Ant said there, is that probably that makeup of what students want over the past 5 years has probably changed as well, in that Chinese students historically probably used to be focused on the highest end schemes. And I think, having had conversations with these guys on the ground, Chinese students are price aware, and that the UK student market is, on a whole, including international students, more price aware, because the whole university world of coming to a new place is becoming more expensive outside of just your accommodation.
So, I mean, again, forgive me, this is an ignorant question, but that is such a big driver for the decisions that students make before they join a university, that actually, if there isn't accommodation up to the standards they're expecting and hoping for, they may go elsewhere for education.
I think that in terms of costs on that point specifically, so a topic that's been relatively hot, I guess, in the last 6 months is the concept of affordability. So what's interesting is when you dive into numbers, and I'm going to talk specifically about UK students for a moment, they obviously have lower budgets, like Anne's said. I mean, last year, I think you're looking at an average domestic rent of about £150 a week is what they're paying, roughly, whereas Chinese students like 240. So there's a clear difference in what they're prepared to actually pay.
What do they get for that difference?
So it depends on the product. So that's a blended average. So your domestic students are going to be living largely in HMOs, but also in some private PBSA, and China's basically the complete opposite of that. So they are typically paying more because they are in better quality stock, essentially.
So they will have gyms and shared spaces and communal areas and better quality parking, all that kind of stuff, as opposed to a room in a house.
Potentially, yes. I mean, on the whole, that's probably a fair assumption, yeah, for sure.
That is a very neat segue into where I wanted to go next, was that difference between HMO and PBSA. And in every respect, in terms of what that looks like for a student, and you've touched on what the rents might be, what that looks like for who invests in that, and what the differences will be between yields, if you like. It's a lot to unpack there. But
that's probably Ant's expertise.
Yeah, absolutely is. Yeah,
you guys
absolutely.
can tackle that one.
So I think we are all of the opinion, right, that we still have a great demand from UK domestic students to live in HMO accommodation.
Yeah, agreed.
But it's on the backdrop of that HMO accommodation being more difficult from a sort of ownership perspective, from an investor landlord perspective. There is lots of new regulation. Obviously, we can talk about rent reform in a second and the impact that might have on HMOs. But that we talk about the change over the last 10 years in student accommodation, and in HMO in particular, it's been a huge amount more, I suppose, regulation on the landlord. And the question is, I suppose, will we continue to see a growth in HMO beds or a decline in HMO beds? And if we see a decline, where do those domestic students go? But look, I mean, the reality is that most HMO landlords, to your point about pricing and yield, are doing very well from an occupancy perspective, right, Rich?
Yeah, I mean, definitely, yes. I mean, you look at the lease ups for HMOs. Last couple of years has been tougher for PBSA, and I'll come back to some figures on it, but HMOs, broadly speaking, performed really well.
Yeah. On that point then, so, there are probably 3 or 4 really active investors in the HMO space, well-capitalised investors who are trying to buy across the UK from north to south and institutionalise that sector by professionalising their services, by providing good quality accommodation. Often HMOs are categorised as that, dirty, grotty, mould-ridden house. Well, these investors are changing that for sure and have done so. I think their frustration is deploying that money and finding the scale. And it's not that the scale's not there, because there are hundreds of thousands of HMO beds.
But it's granular, right? Isn't it?
Yeah.
It's granular, but there are a lot of landlords across the sector that own hundreds of houses, right? So there is the scale out there. The challenge is that they're well occupied and their income's strong, and that they've owned these houses for a long time, and they're staring down the barrel of a huge capital gains, payment tax if they sell. And so really it's a case of there's pent up capital looking to acquire at scale HMOs, but unlocking it is real frustration. And HMO landlords will sit there and say, well, you can buy my 120 houses in Manchester, but they're full, and they have been full since I've owned them, and my rents have been going up nicely for 3, 4, 5% per annum. So if I'm going to sell, then you need to pay me a big price, and the capital out there at the moment perhaps can't bridge the gap and get to the price.
And I guess won't support the bricks and mortar value as a house next door. I.e., the prices of the houses on the road for bricks and mortar values are probably reasonably low, but the yields are pretty strong.
Yes, correct. Yeah, I mean, there are obviously instances where the value of the HMO, licensed HMO with 6 occupants, is double the price of the house next door with no license, if not more, and that varies throughout the country, but that would be rule of thumb probably right. But to your point around pricing and yield, I mean, historically, HMO yields have always been softer than PBSA, probably by 100, 150 basis points or there or thereabouts from what we've seen. And I suppose that the HMO space has attached to it a little bit more risk, in the sense that you own 500 chimney pots and 500 roofs and 500 front doors and X amount of individual houses, rather than just one building with 500 students in it with one roof. That's kind of the reason why I think over time there's always been that price differential.
I think on that final point, and it's interesting, probably in the last 2 years maybe that gap may have tightened in some areas, whereby there is ultimately, the idea of lettings risk in PBSA maybe has historically been overlooked, in that if you've had 5 years of year-on-year rental growth, fully let schemes, operationally easy, you just collect your rent every month and happy days. But in the last couple of years, some of these operators have seen that their blocks are 70-80% let, and it suddenly makes them go, operationally, there is a risk there of letting these rooms if we don't price it correctly, if we're not, asset managing and being proactive in that sense. So I guess in certain locations and certain assets, that gap is probably tightening, whereby there are the risks you've just touched on, and from an operational perspective with HMOs, but there is also potentially, for the right product, there's more comfort that you can let these rooms year on year, and you're not chasing.
So your argument is that the differential in value or yield, let's say net yield, should be marginal between HMO and PBSA, because HMO the occupancy is so strong.
I think
maybe
interesting point there.
Yeah.
I mean, again, if you're a HMO landlord, I mean, it's not the case for everybody, obviously. Take something marketing costs. For some of them, it's basically nothing. Whereas we know in the last few years, some previous operators are paying 5, 10,
Yeah.
15% of rent to actually fill the rooms, which is a massive difference.
On that, we were selling a portfolio in Southampton, and what they do is they pick their best house every year, stick a sign outside the front, and then they get the phone calls, and that house would be let within the first week, and then they say that one's let, but we've got XYZ down the road, and as you say, basically zero marketing costs compared to your PBSA operators.
And I think your point at the very start around what's changed over the last kind of 5 years or so, I mean, a lot of us go to industry conferences.
Yeah.
I mean, go back 5 years, HMOs was not even discussed. Literally zero discussion around it. And it was not as if the market wasn't there, it was always been there. So there has historically been a huge lack of awareness of HMOs more broadly. And that's starting to change a little bit, but it's still a long way to go.
Is that the sector at that time trying to shake off the HMO student thing and go into this big shiny?
I guess not necessarily, but I think it's just in terms of press coverage, PBSA is the big shiny new theme on the block, so it's easy to cover and it gets a lot of, I guess, institutional awareness and coverage, whereas your HMOs are probably some under the radar.
Well, they're granular, aren't they?
Yeah, exactly.
And I think operationally, a lot of institutional capitalists struggle to get their head around the granularity of managing a HMO.
And is that still the case?
Well, yeah, but there are people, I won't name them, but there are successful examples of, I think, businesses that have been able to demonstrate that you can institutionalise and you can operate those platforms of HMOs. I think the truth is, though, Richard, that the leakage and the cost to operate those HMO portfolios is perhaps a little bit higher than what people had anticipated, and that goes to common things like would affect any sector, inflation and utilities, everything else that goes with that. But I think maybe that it's that gross to net is higher in HMOs than it might be in PBSA.
So is there, where the markets, I find when the markets are changing in all sectors, there's the phrase that we always throw around, which is that flight to quality. And are you finding that, how many tiers are there normally, primary, secondary in your sector? And are you finding the gap between the two?
Well, can I just jump in on that straight away? Yeah. Because I think the biggest theme in this market at the moment is a two-tier. Yep. It's becoming a two-tier market, and I think there's a lot of people in our positions, sector commentators talking about this. So I don't want to labour it too much because I think it's out there and it's almost like everyone's understanding this now. But what I will stress is that Will and I sit there now and look at 2 years ago regional yields for PBSA were anywhere between 5 and maybe 6%, right? And then secondary tertiary yields would be somewhere between 6 and 7.5%. Right, so you basically had this 250 bips, 5 to 7.5 range in PBSA across pretty much across. Will, would you say the whole sector? Now, yields regionally. I'll leave London aside for a second. I've pushed out. They've softened for prime regional kit, but you've got this sort of real expansion at the top end where we're seeing 9, 10, 11, 12% net yields. As you know, Richard, some of the stuff that you sold in the auction, to actually trade some of this secondary kit. And so really, we've still got relatively tight yields, probably 5 and 3/4 out to 6 and a bit in prime regional. But we've got this expansion of the yield profile for the sector right out now from secondary and tertiary markets to, from 6.5, 7, right out to double that to 12.
What would you say is the main driver of that, softening in the last?
Well, I think we talked about this earlier, didn't we, Will?
Just on that, that's not necessarily for buildings that are fundamentally flawed. That can be buildings that are, have a good track record of 3-4 years fully let. And it feels like there has just been there's a sentiment shift whereby a lot of the experienced capital investing in student have pulled the plug on anything that's outside of Russell Group universities. And that buyer pool then has massively shrunk. And there's a lot of people sat on their hands.
You're right. They're all chasing the same thing.
Yeah.
Which to me, that's a risk. Yeah. We've seen it. Glasgow is a good example. We've seen occupancy drop off quite a bit this year. Everyone's chasing those same opportunities. So whilst, yes, people want to be in Russell Group, and yes, you look at kind of that 2-3 tiered market where those universities have been better at recruiting, which is we can't deny that they have seen numbers grow. But if everyone's chasing the same, everyone's building the same locations, they no longer actually are good from an investment standpoint.
So when you say everyone's chasing, do you mean that the students are chasing to study there, or the investors are
Both.
chasing? Right.
Yeah.
That's back to that. Sorry, that's back to that flight to quality thing. Is that because there's a nervousness generally in the sector? So you think actually stick to the stuff that you know is always going to let in the areas and the cities where you've got prime universities.
Yeah, on paper, I think that's the idea behind it. But in practice, that might not necessarily always be the case. And that it's something I've got written down here, is that idea that in my head, we talked about this as a team, that actually, you know, there's opportunities for those who can be a bit more dynamic and not be wedded to a specific mandate of we have to buy 200 plus beds in a Russell Group city, and go, actually, if we look past that, because that's what everyone else is looking at, this is actually a really fundamentally good building, 10 minutes walk from the university in a town that no one else is looking at. It's been fully let year on year, and rents are growing.
And maybe a specialist university
Yeah,
that
exactly.
in a couple of courses that
Exactly.
others are not doing.
And at the moment, you can buy those assets that are performing very well for yields significantly softer than those prime yields in the regions.
I suppose knowing someone that knows where occupancy rates are really high and where demand is really good year to year in certain locations is quite
It's
valuable,
helpful,
right?
yeah.
So
I mean,
Hal was nervous about getting Richard on this.
Well, I've got some positive news for you.
Because he's always stood behind the presentation, you know, guided by facts and figures. And
I know,
we're letting him off the leash here.
There's a few in my head. So if you look at occupancy for last year nationally, so across all the markets we track, it was about 86%. So it was down pretty significantly compared to previous years, and down from where people wanted
Which
to
would be,
be.
what,
I mean,
mid-90s?
Yeah, basically. So that softening for 2025 was real, did see it, and that's why I think there's a lot more nervousness around, is it a blip? Is it something more structural? People are trying to work that out.
Sorry, I'm fascinated by this. Is some of this, I suppose it's all anecdotal to a degree, but is some of this driven by the uncertainty globally and politics and conflict?
It's a combination. So if you look at, it's getting very difficult to pin it to one specific thing.
Yeah.
So if you look at, again, that point we made earlier around postgrad volatility, again, some of these universities have seen less students. So that's factor number one, albeit not all of them. You've got anecdotes plus some data that suggest more students living at home. So that's number two. You've got build to rent, which we know has been impacting certain markets, and that's relatively a new issue that the market's not had to deal with before. So you combine all of those together, plus affordability more broadly, all of those together, it's kind of a combination of those factors, which is what I believe has kind of impacted the market for 2025. Again, though, positively, as I mentioned, what we've seen in the May data is actually occupancy now up marginally year on year. So we are starting to see some early signs that it's not going to be down again, and actually could be up compared to last year.
And is that like, sorry, is this like for like in terms of beds? You know, is that occupancy up because some buildings have become obsolete, or they're not on the market, or they've been repurposed?
No, so it's broadly a like for like
Right?
example.
Okay.
Yeah, and actually the other interesting part there is you look at the next level of data, it's the clusters that are actually performing better year on year, which is I've not seen before. So
And that's old fashioned, right?
So
That's
and
really-
also there's a potential argument to say they're probably going to be slightly more affordable than studios.
Yeah.
So again, this topic of affordability, I think, is going to be a key one that's not going away. So yeah, we'll see how the rest of the year plays out. Again, some early signs of kind of positive movement.
Well, there's a lot of conversation, isn't there, generally in politics about the cost of being a student, and also, I suppose, how many students post graduation are getting jobs, and that must filter down to the appetite for 18-year-olds to go, I'm going to go and take the plunge.
I know, but then I always ask myself, Rich, like, what is an 18-year-old going to do?
That is the
other
question,
than go to university. I mean, we as a business also will employ apprentices, and we'll do apprenticeship degrees, and it's very successful, but we have a limit on the amount of people that we can take in, and as any other business would do. Over the course of even 5, 10 plus years, you're not going to see this big swing overnight whereby all these 18-year-olds are all of a sudden going to be doing a degree apprenticeship, which is just not practically possible. So the university will remain, and this is the fundamental great thing about our sector, it will remain the go-to for most 18-year-olds coming out of school.
Going back to so many thoughts come to mind, going back to your sort of stats and data, do you get visibility on what is being studied? and whether there's fluctuations in demand for courses.
Yeah, it's not something we look at in lots of detail, to be honest. There are some industry data sets around it, but the problem the sector faces, a lot of that kind of headline demand data is so out of date that it's not giving you an up-to-date perspective. And is that changing? And actually then be able to base your decisions off it. Because if it's 2 years out of date, it's
It's interesting though to know.
I think
interesting to see that.
I think that that's an interesting point you hit on, because I think what you're getting at there is, are we going to see a significant shift in what students are studying?
Yeah.
And you think about things
logically,
like
you'd think so.
Well, that's exactly what I was thinking. AI and people thinking actually, I don't want to go and study history because I need to get tech savvy and understand why I'm.
And we are reliant on our universities, our institutions in this country, being alive to the changing environment around us and offering courses that are suitable for what is a very changeable and changing world. We're fortunate in the UK to have some of the best institutions in the world, and that's the reason why we continue to attract so many overseas students. But we are, as a sector, reliant on them and their performance, right?
Yeah.
I mean, we just are. And that, just going back to the piece around secondary, tertiary markets, that's what drives the confidence and the yield and the differentials in the investor sentiment and what investors are willing to pay, because they're looking at the quality of the institutions and they're pinning value on them, right? This is what it all comes down to at the end of the day.
The covenants of university.
Correct, yeah. So the reason why, to Will's point, they'll go to and pay more for or find comfort in, or the criteria of the fund will be only Russell Group University, is understandable. What we're saying is there are lots of markets home to big Russell Group universities that are not performing particularly well at the moment, and there are markets which aren't Russell Group home to Russell Group universities that are performing relatively well. So that's just a nuance, I suppose. That
the best way to find that out is to call you up and speak to you, I guess.
Well, I guess just on that, it's so asset specific in that you might have a building that's 200 beds in Manchester and you go, happy days, that ticks that box, but it's 1.5 miles down the road from the university, and if student numbers plateau or drop slightly, that's when you see occupancy dip.
Yeah.
If you can get comfortable that actually, student numbers can drop 20% for the next couple of years, but actually we're the best located scheme in the city, and therefore we're confident we can be like year on year. That's what you need to think about, rather than necessarily just the macro location. It's things like micro location, pricing, where you sit in the market. All of those factors are being considered more than just.
And there's also,
more
I guess,
simple
factors
approach.
beyond that. So I was at another industry conference a few weeks ago, talking more about the student experience, and something as simple as having a really good site manager in terms of what that does to rebooker rates, but you can't put that on a spreadsheet. So something as simple as that, you have two schemes that are in theory on paper the same, one really good site manager, one performing not so well, completely different.
Yeah.
So how do you then put that into a spreadsheet and model it when it's down to a person?
Interesting. I mean, I know we'll come to it, and you briefly referenced BTR, but that's the same there, is that they'll have buildings that are performing better than they should because they've got a good management structure or person they're running it, compared to next door that doesn't, and it does impact on value and income.
Just on BTR though, and as a reference point to student accommodation, I mean, I talked to Richard quite a lot about this, and we've locked horns on it. I accept that there is now competition from BTR, and if you do analysis of some of the sort of BTR products in some of the regional cities, and you compare it to what PBSA are charging, then there isn't much in it, right? And so then you ask yourself your question, well, am I getting better value for money by being in a BTR development? And that's what the issues are. But it is, I think, isolated to a small number of cities, right?
I mean, it's not nationally.
No, because I mean, a lot of regional centres don't have that much BTR.
Yeah, I agree with that.
Some do. And it's in those places that I think we've got major competition as a sector from build to rent.
Yeah, I agree. I think that, we've mentioned it before, the positives, you'll probably be more well versed in this, they don't want students.
No.
So actually it's a short-term fix for occupancy. I guess the challenge that some of those operators face, if you do expose yourself to students, how do you wean yourself off it? And that's a slow process, potentially.
I suppose if the damage you might do to your core business.
Yeah, I mean, I think that the reason why, BTR is a journey that was supposed to be, after your PBSA journey, right? And the idea is, I think, our BTR colleagues might tell me off for this for being inaccurate. I think the idea is that you stay there for a relatively long period of time, whether it be 2, 3 or 4 years, but it's your period before perhaps buying your own home. Or, they would argue maybe even families live in BTR.
Yeah.
And I think that's one of the reasons why the value in terms of yield that you would apply to a BTR scheme, multifamily scheme, has always been much sharper than PBSA, because you get that longevity of tenant. And I think if you start throwing students in there, which we all know are, you know, seasonal in the way in which they occupy a building, it adds that element of risk in terms of occupancy. And then you question why there is this differential in value between BTR and student. But what I would say is that buildings that are occupied by students will ultimately, over time, filter those students out, and they will be back into PBSA.
Yeah, which I do agree with.
Yeah, which is the thing we're aligned upon. Yeah.
Playing quite nicely.
For now.
For now, yeah. You briefly touched on it 10 minutes or so ago and talked about implications there for renters' rights.
Yeah.
Too early to say. What do we think? What are we seeing?
I guess what we've seen change over the last 6 months, if we go back again around 6 months or so, there was a perception from the PBSA market they might benefit from some changes in the seasonality of the HMO market. Without getting bogged down to the details, essentially they were hoping that the HMO market cycle will start later. If PBSA is exempt, they don't have to do that, and therefore can try and attract some early demand.
Right.
The impression that we're getting is that's not going to happen, and actually what you'll see is HMO landlords and agents essentially move to more of like a reservation model, so reserve the room early but not sign the contract. Mm-hmm. The tenant has full flexibility to walk away, so it's a free option for the students, so it's great for them, but it means that actually changes to the seasonality of the HMO market might not be as severe as I think what PBSA were expecting.
So it's just a different way of working. Your demands shouldn't be affected.
No,
people still want to operate and live there. They've just got the flexibility to leave it late, right?
I mean, it's a really interesting question, because there's so many ways of looking at this. I mean, one might say that actually HMO becomes more attractive overnight because it has a degree of flexibility for the student around its ability to terminate its contract before the end of at the end of the academic year, rather than stay all the way through. So all of a sudden that looks like an attractive option to me, whereas PBSA is still trying to drum out the 48, 50, 51 week contracts, which look fairly unattractive all of a sudden because I've got more flexibility in HMO. So we don't know how the students are going to react to this yet. We don't know, because it's so new, how it's going to change the dynamic of the market. But one thing is for sure, it's going to be super interesting to see how it does play out.
I'm going to oversimplify it, which is a big thing, is that the demand for the building is there or it's not, right? Yeah. So those going for the PBSA buildings have chosen they want a higher level of accommodation. So they'll do what they need to do to get into there. I just remember for me, it's a long, long time ago, but there's a clamour, isn't there, at the end of the year for people to get into the places they want to get into, whether it's first year students or second year. To the good stuff, I get that.
Well, there was. I'm not sure.
I think it depends on the market. I mean, it has changed in some. Some markets are still very early, where peak demand is November, so it is still super early. I think the key question is really what proportion of the market is going to serve the notice early, and that's the bit we don't actually know. So I think there's an argument to suggest that maybe when you're at university or our university, I don't want to go home. Like, I want to stay with my mates at university. So that's one option. Another option is, well, that's fine, but if the parent's paying, they might say you're leaving because we want the money back. So I think it's just, how do these factors play out? I think, interestingly, from PBSA, putting that flexibility point to one side, none of this stuff helps HMOs in terms of making HMOs attractive for the landlord. So again, there are question marks over if your income is going to be impacted by student serving notice. Are you going to stay in the HMO market? Possibly not. Is it going to be a mass exodus? I don't think so, but we don't quite know, I guess. No.
So it is a wait and see. It's the same in our sector as well. We've got ideas of how it's going to play out, and there are different scenarios that will play out. We just don't know how much one's going to be compared to the other until it all shakes down, I guess. And you won't know that until September, October time, I guess.
Yeah, I mean, for us, it might create opportunity, and I don't think the HMO landlords that we're speaking to at the moment aren't necessarily pinning their current feeling towards owning HMOs on renters' rights. It's just an accumulation of, hits, I suppose, that they're receiving from, I suppose, central government in terms of their ownership of HMOs. It's just becoming a little less attractive than it was for them. But it goes to the point that they've had an easy ride for a long time. They've had such a good time. They bought cheaply. The income has been superb. The occupancy has been superb. The yields have been superb for them. And it's just a slightly different environment now, more regulation, as I said to you earlier.
So I'll try and put you on the spot a little bit here.
Yeah.
As an investor, what should you hold on to? As an investor, what should you be worried about if you've got in your portfolio? Because that is where, ultimately we come in and help a lot of these investors and landlords. But what's good, what's not, and what can you do for repurposing, adding value?
Again, going back to what we mentioned earlier around kind of 2-3 tiered market, there are some locations where you look at the long-term, call it change in student numbers, is not good. I guess in terms of the affordability question, that's one that I guess keeps coming up. I think that's an interesting one. Again, we've looked at affordability for domestic students, and actually it's an interesting topic because a lot of commentators talk about affordability but reference the maximum maintenance loan. The reality is most students do not get that. What's actually really stark is that if you have 2 parents earning the minimum wage, you're getting nowhere near the maximum. So it shows how kind of not accurate that is as a measure. And actually, if you look at the balance of the maintenance loan just after rent, based on 2 parents working minimum wage, I think it's negative. So your maintenance loan doesn't even cover the cost of rent. And that's definitely been a shift over the last 3-4 years. That suggests that people are going to be much more interested in affordable stock compared to, again, 3-4 years ago.
Yeah.
I think it's also a question of value in the sense that affordability is different for every
personal,
student and family. And the key is not making sure that as an operator, you are not absolutely pushing everything as far as they can possibly be in comparison to the schemes around. And that's different in different cities. And you'd expect that a basic room in London is still going to be more expensive than a basic room in Manchester. And it's making sure you're well positioned from an investor point of view or from an operator's point of view to ensure that, you may not be affordable to everyone, but for the sector of the market that you're going for, whether that be the high end of the market, as long as you're providing the very best product, you can probably justify why you're charging the highest rents. And likewise, if you're providing a mediocre product, then you can't be targeting the highest rents because that is where you'll get caught out with occupancy challenges. Again, this is just on the affordability point. I think it's worth touching on. There's often has been a bit of a theme or rhetoric in the market that the non-ensuite bed is, no longer a product that students want to live in. And my view, or I think sometimes our view when we've talked about it, is as long as it represents good value, there are students who will live in non-ensuite rooms if they're priced correctly. And I think as the market's more aware of affordability, there may be a bit more of an open view on that.
I mean, the HMO market is a good demonstration of
exactly.
the fact that students. I mean, I know some landlords are now moving to a sort of all-en-suite model in HMOs, but I think the point is that it's so well occupied, that market. It's proof that students will share a bathroom, right? But what
it's character building, right?
But it's funny, because like everything goes full circle, doesn't it? And so now we're looking at this sort of like repositioning older first or second generation, whatever you want to call it, student accommodation, because it allows investors to supply the market with affordable accommodation or more affordable accommodation. And indeed that in Will and I's job and the team's job at the moment is probably the most active part of the market. It's not news to people. That's what we're seeing when most activity is where someone can look at a sensibly priced building and say, actually I can make some improvements to this, but I can still retain, a relatively attractive low price point per bed for the student, and therefore I would say that is a low risk part of the market, and I think that's where I want to be. So that's where the appetite is at the moment. The funny thing about affordability, Rich, no one's actually ever in any conference I've ever been to stood up and said this is the solution to affordability.
There isn't one. That's the problem.
No, but there kind of is, which is Coventry, right? Which is build loads of stock, right?
Oversupply the market.
Oversupply the market, and then rents will come down because it's ultra competitive. And it's funny, because I don't know what the data's showing you if you ever had time to look at it, but the narrative I'm hearing around Coventry is that it's picked up.
It's definitely recovering.
You just wonder, don't you, whether or not students are now looking at Coventry and seeing, back to your point, about value. So they're seeing product there, which is relatively new, and thinking, crikey, I can go to Coventry, I can live in, decent PBSA with amenity.
That does stand to reason, doesn't it? I think you're right in that there's some logic to the fact that, particularly if you're a domestic student and you get into offers from 3-4 universities, you might look at them and say, right, well, I'm going to grade them on on some variables, one of which is actually it's £30 a week cheaper for me to live here compared to there.
Yeah.
That's
it's a balance, right, between the
yeah.
degree and the university and reputation versus cost.
Yeah.
And
The reality is, though, also there's often not a huge amount of science behind where students choose to go. If they go on the open day and get shown around a really nice block and it's 150 quid a week versus when they go around somewhere else and say it's 300 quid a week, they go, happy days, that's more money that I can spend at the pub. And genuinely, the reality is students do not necessarily go in with that much science.
I think you're showing your age there. I don't think students drink anymore.
Well, there is something in that as well.
Well, actually, I mean, okay, there's so much to get through and we're going to run out of time.
Yeah.
Locations, we've got skirted around. We talked about a lot of locations,
Yeah.
and I'm quoting you guys on this, but say Huddersfield or Coventry, some of those secondary stroke tertiary locations. We've seen a lot of this stuff, and it's probably an opportunity to talk about that, where we've been selling it for purposes of repurposing. There's value-add opportunities.
Yeah.
Do you want to just sort of cover some of that ground that we've, 2-3 years we've been doing this, haven't we?
Yeah, I suppose I'm not an investor, I'm an agent, but I quite like working with investors that are always looking for opportunity and are looking to do something slightly different, and they're looking for a story that isn't the same as everybody else's story. And what I would say is that we still need to build good product. There's still a place to build good products in the right locations for the right student. There's still the right demand, and there is still some incredibly good developers out there delivering really good product, and we need it. We've also acquired in those cities as well, because we've got clients that want to find opportunities, and there are good solid university cities out there that have had oversupply issues, and it's no secret to which cities or towns they are, but ultimately what we see is recovery in those places, because nothing gets built there, because there isn't the rents have fallen, there's a viability issue from a build perspective, the confidence has dropped from an investor perspective, there is no more development. What ultimately happens if you're underpinned by good universities is that those beds fill up, right? So if you can come in at a point where actually investor sentiment has dipped and there is a bit of an occupancy issue, but you can buy well, and to Will's point and to your point, Rich, buy in the right micro locations, then that is a sensible model to follow, right? Because you're going to be buying in at way below replacement cost. Build cost now for student accommodation in regions might be £110,000, £120,000 a bed. Some of these, buildings that we're seeing in the market at the moment in even Russell Group University cities, right, which have been challenged by occupancy issues, are trading for £30,000, £40,000, £50,000 a bed. And that's got to offer the investor really good opportunity.
I think you're right. Part of it is timing and investment horizon. So again, your point on Coventry, is it recovering? Yes, from a relatively low base.
Yeah.
But you need to time it well.
Yeah.
So, Glasgow is a good example at the moment, right? We've seen occupancy come off. There's still applications going in for Glasgow.
Yeah.
So what's your time horizon? What's your timing? If you take a view of actually, let's wait a year or two for the market to come off a bit, and then enter on the view that actually longer term it will recover, maybe you'll be all right.
Yeah.
So it comes down to your perspective on, I think timing.
Yeah, and horizon is correct as well. Like, what's your investment horizon?
Yeah,
if you can do it. But what I would say is that there's opportunity everywhere at the moment. You've just got, your timing is key. Understanding the market and understanding what you're getting into is key.
What's the biggest strength, would you say, at this moment in time in the student housing market, and why will it continue to perform for investors?
So what's interesting is if you look at actually the rankings data for the UK, actually it's holding up really well. So I think there was some concern that given some of the financial difficulties that universities are currently in, will you see kind of a slow decline in their global rankings? And actually, Imperial were now second. So Imperial are globally ranked second, so they've jumped up a little bit. And if you look at the UK universities in the top 700, about 50% actually improved year on year. So I think that's a massive driver for international demand to come to the UK. There is still also, particularly from China, a big social economic benefit of studying outside of China and actually studying at a top 100 university. Social mobility and a whole other reasons around it as well. So as long as we can maintain the university's prestige in the UK, I think there's always going to be a place and a demand from international students to come. And hopefully that continues.
I think from the supply side, hopefully everything Richard says is true, and that demand keeps coming in, and that's fantastic. But where we are at the moment from a supply point of view is that it's very, very difficult to deliver new PBSA beds across the country. Development costs are, 120, 130 grand a bed in the regions, and sometimes higher than that in London. So with that backdrop of, a strong demand pipeline, there is this view that supply is dried up and there isn't going to be many beds delivered going forward. So it's very hard to pinpoint that across the entire market. But I think basically if you've got schemes in the right locations that not just on a macro level but on a micro level that present value, then your buildings will continue to be let, and there is opportunity for sustained sensible rental growth and returns over time.
Yeah, we talked earlier about the importance of the covenant, the strength of the university, and no university still has ever gone bust in the UK, right? So therefore the covenant of our sector is very strong and remains very strong, and there appears to be ability within the sector to find ways around its challenges. So that might be, we speak about it regularly, don't we, mergers of
which there'll be more.
Which will be more of, we think. And as long as there continues to be fluidity in that and the ability for universities to evolve and adapt to changing environment, then our covenant remains really strong. And I think that as a backdrop to the sector is really important, and I think that's what's valued by its investors. And I go back to the point that we have a strong UK domestic population of 18-year-olds. It's coming off a bit, it'll come back a bit, it'll always fluctuate, but the demand pool is clear and obvious for everyone to see. And my belief is that there'll have to be a significant shift in how the UK works as a country if all of a sudden we don't have a lot of 18-year-olds and wanting to go to university. I don't see that happening. So from an investor standpoint, I would say my demand pool is pretty consistent. I can be pretty confident that it's going to be there. It's just ensuring that what I invest in is at the right place at the right time and accommodating the right people and the price point's correct and everything. I think where people get caught out, Rich, is just assuming that buy this and
it's more of a blanket approach, right? Cookie cutter. It's not going to work everywhere.
Measure twice, cut once.
Yeah.
And I say one last thing. It's not the last thing, but quickly, biggest threat.
I'd probably categorise it as two things. It's like known risks and unknown risks. So I think unknown risk, policy change.
Yeah.
I think we know how quickly that can happen. There's visa requirements. I think it was last week, government thinking about minimum English requirements, I think it was, university. I mean, where that's come from, I've no idea. So that's suddenly a policy change that's not happening necessarily, but shows how quickly it could happen. I think known risk is the affordability point. I think that, again, that's not going away. But as you said, it's going to come down to individual location. I think I've been fairly positive so far, which I think, on balance, is quite unique for me.
So
I'm going to throw in an interesting stat I saw the other day, and I'm not
when
saying
you say interesting, is it negative?
Well, it's negative, but also
negative.
fascinating.
Okay.
So there was a stat, and this is not relevant for PBSA specifically, but I guess points to the longer term demographic decline in some locations. I think it was China, where in China, if I get this right, over the next 10 years, they will lose the population the size of France because they don't have the birth rates.
Yeah.
Now, that's not all relevant to PBSA or even UK higher education, but longer term, what does happen if there are less 18-year-olds? So at the moment, fine, but this is probably 10, 20 years out. We don't quite know, but that's an interesting...
No. But I suppose that's where we hope that the strength of the institutions in the UK
and they'll evolve
global
heavily,
rankings, etc. will
in answer to that question, though, because we are running out of time, what do you think the biggest threat is? Will?
There's just the challenge in terms of making things stack up. I think on the sense of there's a huge amount of value add capital in the market, and I think they need to pull levers to make their returns, and that usually comes in the form of some sort of yield compression or rental growth. And I think that glut of investment is all chasing the same deals because there's not that many deals out there where you can underwrite significant rental growth or yield compression. And when everyone's chasing those same deals, it becomes very competitive and arguably expensive, and people can end up paying over the odds on the entry price.
I think value is the word that I would use.
So it's value and affordability is really what
It's the value of going to university, the perception of going to university, the value of it. It has to continue to add value and be valuable for people.
Which has been challenged forever, hasn't it? To varying degrees.
But I think there's also an opportunity for the sector to actually change that dialogue. So what we don't see, and you're right, you mentioned earlier, a lot of negative press recently around is university worth it. There's no counter argument. So where are the counter arguments? As an industry, why is the industry not saying, we recognise it's expensive, yes, but also all these other benefits are non-financial, like personal growth, experience. No one talks about that. So actually, as a sector, there's probably an opportunity to promote the benefits beyond the financial.
I think what we've got to be prepared for as a sector is change, and not necessarily bad change, but an evolution of what we've got.
Which it has over the years anyway, hasn't it? So it's
the student accommodation world will adapt around the universities changing as it needs to, right? So there was talk for a long period of time about going from a 3-year course to a 2-year course because that was more value. That had more value to the student than staying in university for a full 3 years. Well, that's fine. If that's how we remain attractive to the 18-year-old, we adapt to that.
This time it is quick. And I haven't prepped any of you for this.
Well, yeah.
You've got £10 million to spend. What would you spend it on?
10 million.
10 million to spend.
Cash with some debt, or
you've got 10 million quid to spend.
All in.
All in. What are you buying student-wise and where?
Yeah, well,
that's the ultimate question.
Well,
I mean, a location's interesting, which I think I have raised before. I think it's Liverpool.
Yep.
So a lot of old stock, not really much pipeline. So again, even I know development's challenging, obviously, but if you can get new, good quality, or even not brand new, but good quality stock in that market that is attractive to that Chinese internationals that are going to pay up, relative to the other quality in that market, could be an interesting angle.
Good, he's answered the question.
Yeah, but I'm torn between. I'd still happily buy a HMO portfolio, and you might say to me, well, that's crazy because you don't know that the impact, as you said earlier, that the rent reform act's going to be. But I still have confidence in that space.
Where?
I mean, probably somewhere like Manchester, because I still think that. But can I just no? But I like the idea of buying a PBSA building, rents have been recalibrated, and they're in line with the market, with a little bit of upside for me in terms of pushing the rents or value add in a prime spot in a good city.
Well,
maybe I'm biased because it's my hometown, but something like a small block in Newcastle, it's a student town through and through. You need to be in the best location, hopefully buy at a good price, and you're always going to have students there. Actually what I would say, but Ant stole my thinking, was a good HMO portfolio in Jesmond. Again, those houses sell themselves, first couple of weeks of every year.
Near Greg's.
Near Greg's. Well, you're never far from Greg's in Newcastle.
There you go. What a great way to finish the podcast. We are running out of time, and I hope the listeners have found that really interesting. I certainly have. As always, feedback. If you've got feedback, any questions that I haven't covered, you'd like to ask the guys, do email me, richard.adamson@allsop.co.uk. And in the same vein, any subject matter in any sectors that we haven't covered over the past year or so that you think would be interesting, again, email me, richard.adamson@allsop.co.uk, and of course we'll try and set up some podcasts that might interest you. In the meantime, thank you to the guests, to Ant, to Will and to Rich. It's been a pleasure listening to you, and we look forward to next time.
Thanks, Rich.
Thanks, Rich.